Have you sold a residential property in your own name in this last tax year? One of the areas you need to be aware of, that if you sold a rental property that's in your own name, that you might have had capital gains tax to pay. The new rules around the reporting of this have been in for a couple of years now. It previously used to be that you had to report and pay any capital gains tax that was payable within 30 days of completion. They extended that out to 60 days, and that's where it remains still through the 24-25 tax year. It's really important that this information still does get included on your tax return at the end of the year. And it's one of the areas that we've seen that people are still not aware of, that they need to report within those timeframes. When you do the reporting, you have to make an estimate of what your income is, because of that will be linked to the rate of capital gains tax that you might have to pay. The reason it's then included on the tax return is that the tax return then becomes your final summary of the income that you've had in that tax year, and that could differ the capital gains tax rate that you've already paid through the year. And the tax return will be the basis of calculating any difference, whether that's more capital gains tax to pay or whether you're in a rebate position on that capital gains tax as well. So this is really important, because we have seen over the last couple of years since this change has been brought in, that people haven't been aware and still feel it's the tax return as an annual process that captures this element to it. So if you've done that, again, assessment of income is really, really key, but making sure that you hit those deadlines as well is so important.